Hello, everyone. I'm Fyruz Khan, and today I'm back with a brand new class. If you haven't liked our page, our Facebook page, just type in Fyruz Education Services, and you will get plenty of educational content. You can also subscribe to our channel on YouTube. Just type in Fyruz Education Services. We have over 80 videos there. It's more convenient and easier to find our videos on YouTube because everything is compiled on a playlist and it's very, very accessible. Without much delay, let's start. However, I would wait 30 seconds for some students to join and then we'll take it forward. So, when I was a student in the UK, I completed my bachelor's and master's in the UK from University of Leicester, and I really had a good time, at my university. And after I completed my graduation, I went back in 2016 to meet my friends, to meet my professors, because I really miss them. I really cherish my university days. It's not because I had a lot of fun or I had a lot of friends. Of course, I had friends, but it's because the journey was really good, and I learned a lot of things. And it necessarily does not have to be about the course or about the subject, but it was very I explored a lot of things, let's put it that way. Different concepts, how things work, how life work. And when I was at my university, I still remember I always used to bug my professors all the time with questions, with random questions. I always wanted evidences and logical evidences of how things work. One day, an interesting question came to my mind. I was in my house, and I got my electricity charge for a month, and it was different from the previous month. So I had this question that, if electricity bills are always different, then why is it considered to be a fixed cost? It should be a variable cost. For example, electricity bill for July, let's say, is Bangladeshi taka $5,000, 5,000 taka, and let's say the bill for August is 8,000 taka. So of course you can see from here, it's evident that the charges are very different. It varies from month to month. So why is it considered to be a fixed cost? So I went to my professor with the question, and we had a lot of arguments, and then we came down to a very interesting conclusion. The conclusion was that, yes, if you just look at the charges, you will consider it as a variable cost. However, there's also another way of looking at it. For example, 500 units were used in the month of, let's say, August, okay? And this usage will always depend, will always change, and then multiplied by the rate. Every unit of electricity that you use has a rate, has a specific rate. Let's say it's BDT 10 taka. And then if you multiply, it's 5,000. So the rate, yes, the rate may change after 2, 3, 4, 5 years, but then this unit used will always change from month to month. It is said that in summer in Bangladesh, we use a lot of electricity because it's hot. We need air conditioners. Whereas in the winter, the charges will definitely go down because our usage will also decrease, right? So we have exceptions. We have special cases, in terms of costs and accounting, and you have to keep that in mind. Okay, so we don't use full costing approach because of this one reason, because sometimes it is difficult to categorize cost. Sometimes it is difficult to put them into boxes. It is difficult to to gauge what is what. So this is why what you do is you do contribution. Okay, this is my total overhead expenses, and every month I'm going to pay 50,000 towards my cost. Okay, that's how it's done, because these kind of things will lead to inaccuracies in the future, and you can't have inaccuracies, you can't have faults in your account. And this is just one example. I can give you many examples where it is very difficult to categorize cost. It can be a fixed cost, it can be a variable cost. Cost changes all the time. Even if you think that rent is a fixed cost, I agree that rent is a fixed cost. But again, having said that, rent also changes after every 2 to 3 years. In Bangladesh, rent increases after a year or so, every year. So in some way, it is also a variable cost, because it will vary at one point of time. Okay, so that's that. So you have to keep that in mind. Okay. Now, decisions about a product or department are based on contribution. We did this in the last class. If you look at Apple's revenue, it's $264 billion, right? This is not the profit. This is a contribution. This is the sales revenue. If you want to know the profit, you have to deduct expenses, and then only you will get profit. I can show you individual sales of their different products. iPhone $164 billion, but this is not profit. $27 billion, $18 billion iPad, Apple Watch is $13 billion, Apple TV is $13 million. Now, these are not profit, these are just sales revenue, these are just contribution. Now, if you want to know the profit, you have to deduct expenses from these figures. Okay, so whether a product should be made or whether a product should be continued does not depend on profit or losses. It depends on contribution. How much are they contributing? $5 billion or $15 billion or $20 billion. The higher the amount, the chances are more likely for the product to stay. Okay, so they don't look at individual profits or losses. They look at total contribution, total revenue, how much they're adding to the company. Okay. And next, the third point is excess capacity is more likely to be effectively used. You are going to take more orders in terms of contribution. If you look at just individually, if you look at profit and losses, you may think, oh, we're not making a lot of profit in this project, so let me not take this project. But when you look at contribution, when you see that, okay, even we are making $1,000 or $2,000, you will accept it, because in business it is said that whatever comes in is good. Don't think about losses, but money should come in no matter what happens. Okay, so that is contribution. We have talked about this. So yeah, but then again, having said that, some departments may have different costs. Not all departments incur the same costs. Marketing may have a very high costs marketing department, because they deal with advertisement, they deal with other lots of things, market research, and it may be expensive than the HR department. Okay, so how do you calculate? So that is a big problem. Okay, but when you think about single product firms or smaller companies that use full costing, they take all costs into account. But someone who's using a marginal costing will not take all the cost, and costs may vary. So that's the that is the problem. And then also, if you think, let's say you have an old iPad, right? And the old iPad also made a lot of profit. It made a lot of contribution for Apple. But if you think that, okay, it's making a lot of contribution, let's not make any other product, let's not innovate, let's just stop here, then it's not going to work. Okay, eventually Apple made a new iPad, iPad Pro, which is entirely different and which even increased the sales and increased the brand image. Okay, so even if you're making a positive contribution, keep in mind that you need to change. A product is making a lot of profit, is making a lot of contribution, does not mean that you have to remain stable. The product needs to be stagnant. No, you have to go out there and change the product, develop the product for the betterment. Okay, so managers always they need to keep this in mind. And 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 the next point is very interesting. The next point is, now, Apple TV, if you look at Apple TV, we've seen that it only contributes $13 million. Now, if you look at that, or if you look at individually, if you look at profit and losses individually, you would rather discontinue this product. But Apple TV is a part of the ecosystem. It is a set with other products, right? You have iPhone, you have watch, and you have MacBook, and then you have Apple TV. You also have now Apple TV Plus, which is like Netflix. So it is a part of that ecosystem. It is a part of that family, and it looks good. So we know that this is not making a lot of money, or this is not contributing a lot, and you want to get rid of it. But once you get rid of it, your set may not look nice. Your family, your ecosystem may be, disrupted. So you want to have this product because this product supports other products. Okay. Sometimes in business, you need to have products that are even not doing well, because they are part of the family. They work with other products well. Okay. So keep that in mind. So these are the 3 points that we discussed right now. If you have any questions, do not hesitate to put it down on the comment box. Do not hesitate to subscribe our page on YouTube. So lots coming up today. And then, this is quite interesting. So, there was a gap in the middle, right? We didn't do any live classes for 5-6 months. In the meantime, I received a lot of messages all over the world that when are you coming back, and can you do this chapter? Can you do this kind of question? And we are really happy that your teaching is good. We took a gap because we were looking at what we've done so far. So we've done over 80 videos, and we want to take a break from YouTube to go back and analyze our audience, okay, and see our audience reaction. And we found out a lot of, insightful data. For example, 60% of our viewers have not subscribed to a channel. That's a high amount, okay? So people people who watches our video, 60% of them have not subscribed. So what are we doing to solve this problem? We have a ticker. We always call out, please subscribe to our channel. It's free, and we have messages going down, right? That's how it works. 75% of our viewers are female. I was surprised, and I was like, okay, why do we have less men? And we are still finding ways to attract, to attract men's attention, because we have a lot of females, right? And we are looking at different, strategies. And then the average watch time is around 10 minutes. I make a lot of videos which are 30 minutes, sometimes 35 minutes, sometimes 40 minutes. So we have decided to make short videos, or even if we make videos that are long, we could break it up in the description. We could have chapter wise breakers for you, according to different timelines that would solve the problem. And our content is mostly watched on desktops, so this is why we have to make sure the quality of our video is good. If you see our video right now, the quality is really good, the camera is good, and we've changed a lot of things on our streaming platform. Yes. Also, the most interesting point is, I never thought when I started doing live classes, I never thought that we would have students from so many countries, and our video is mostly popular in Zimbabwe. Okay, followed by India, Pakistan, Malaysia. Unfortunately, Bangladesh is only at 1.9%. That was a great, revelation. This also, gave me a reminder that I shouldn't speak in my native language. I shouldn't speak in Bengali. Okay, and then what else can we do to have more Bangladeshi audience or to have a more well-rounded audience? Okay, so in whatever you do, whatever approach that you use, you should do some kind of evaluation. You should evaluate your performances. You should evaluate what strategies you're using in the business. You should evaluate your results all the time. Okay, so when we look at costing approaches, we must evaluate and see what we have. So if you think about full costing is really good with single product firms. There is a sneaker company called Allbirds. Starbucks founder has invested a lot in this sneaker company, and Allbirds can use full costing because they only make sneakers. They only make one kind of sneakers. You will see on social media there's another ad of a sneaker called Atoms, and Atoms only has one range of sneaker with 4 colors only. That kind of company, that kind of small company with just one product, single product, can use full costing approach, right? But for multi-product firms like Apple or like Samsung, who has a range of products in the product portfolio, they would have to use contribution costing, because I told you that overhead costs, it is difficult to section out overhead cost or to categorize overhead cost. This is why they look at just contribution. So and the final figure may be inaccurate or misleading. And so full costing data, yes, you can use it to make comparisons, but then full costing should not be used to make decisions. You can still use it. I mean, if you're using marginal costing, that's fine. And with that, you can also use full costing if you want to be careful. But then you should not solely rely on full costing to make important decisions in your business, right? So marginal costing or contribution costing is mostly used in decision making, okay? And they have this mindset, okay, this is our contribution, let's say $164 billion, and by next month we have to pay our overhead expenses, and then they pay it out, okay? That's how it works altogether. They have a timeline, they have a time frame for paying their expenses. But the only problem with marginal or contribution costing is that do not overlook overhead expenses. Sometimes you may just assume that $164 billion that we have here is profit. No, this is not profit. This is your contribution. This is your sales revenue. Then you have to minus your expenses, minus direct cost, minus overhead expenses, minus tax and other things. This is just the revenue or just the contribution. And sometimes it happens in marginal costing. You may just say, oh, we made $164 billion, and you can overlook your overhead expenses. That is bad. That is the biggest problem with marginal costing, okay? Do not confuse it with profit. Okay, you have to pay your expenses after that, expenses, taxes, and you can't forget that that's not the final amount that you have. Okay, final evaluation it depends on the situation, whether you're a big company or a small company. If you're a small company, I would go for full costing. If you're a big company, I would go for marginal costing. But when we talk about marginal costing, please make sure you should not overlook expenses. In that way, it can have a huge problem in the business. If you don't pay expenses, it may accumulate over time, and it may cause problem. It may also cease trading. So that depend on the situation. Even if you're using marginal costing, you can use full costing, but don't rely on it solely to make decisions. Okay, look at other instances, right? And then it is not just about costs; it's also about qualitative factors. What kind of skills do you have? What kind of people work for? What kind of machines are you using? It depends on the quality of your location. It depends on other factors as well, right? So that's my final evaluation of costing approach, and that's that. Today we finished the chapter finally, and we have evaluated costing approaches. We have talked about how you can use in single product firms, how you could use in multi-product firms. I've given examples of our YouTube channel, how we evaluated it over time, in over 5 to 6 months. When we had a lot of people watching it, we had a lot of data. And similarly, you should evaluate your all approaches in business, especially, let's say, when you're using costing methods. Then we've talked about these examples, which are great. I've given you a summary, so that's that. Thank you very much. It was a great class. We finished this class in 23 minutes, which is great. Do not forget to subscribe our channel on YouTube. Just press the subscribe button, press the bell button. It'll send you notifications, right? You can also like our page on Facebook, and I will be back again tomorrow with a new lesson. We finished a chapter, so I will be back with a new chapter, so stay tuned. Thank you very much.